Well, good morning, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap. And this is for April 13th, 2024. Remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And, well, what went on this week? The market's beginning its grind down as it tries to defend the 50-day moving average. However, the Dow has fallen below this line in the sand as the intermediate-term indicators continue trending down. And we're going to see those charts right now, right after this slide. All right, our weekly stock analysis video. Well, we're back to Costco, and it came out with numbers that surprised even the optimist. And it wants to get back to its recent all-time highs, and it might do it this week if there's any cooperation from the market at all. In our ETF video, it's all about hedging, folks, and most of the ETF portfolios that are the money managers manage that follow our system are hedged 30%. And even being hedged, our top stocks in the QQQ ETF are outperforming the S&P while exhibiting less risk than the S&P. Folks, that's the place you want to be. They call that nirvana. And it's all about hedging, and using the proper hedging techniques. All right, let's look at the S&P 500, and folks, you can see that it hit this top band, the volatility band, and then came down, hung around the 20-day moving average for about a week in here, and then finally broke down, and this is scary right here. We don't want to see it go below this line on Monday, because if it goes below it and stays below it, that could mean there's a lot of selling pressure going on, and we'll just have to wait and see. But Monday could be a pretty nasty day. We'll see. We've had surprises before in this market, because don't forget, even though the Fed says they're going to lower interest rates sooner or later, the market wants it sooner, and the Fed is saying, well, inflation is still sticking around. But the PPI numbers that came out, the Producer Price Index that came out on Thursday, surprised everybody, because the day before, the Consumer Price Index, that's the prices we pay, rose a little bit. We didn't want to see that. But the PPI numbers, the wholesale numbers, went down a little bit. So in the future, that cost or that reduction in price of production will be passed on to us, or it should be anyway. So the market is saying, okay, let's wait a little longer, but in the meantime, let's get a little correction going in here. And when we come down here to the intermediate term indicator, all we see is it pointing down, folks. So yeah, we have a weak market in here, but the market's readjusting. And don't forget, the economy is doing very, very well out there, because the numbers for employment are coming out just fine. The economy's strong, so we don't have what is called the systematic risk in the market right now. So things are looking pretty good, but the market is worried that the Fed might have to raise interest rates. But if you look at that PPI from Thursday, we're saying, okay, market, just calm down a little bit, because the longer term looks much better than the shorter term when it comes to inflation. And when we look at the candlestick charts, this is the S&P 500. The green line is the 20-day moving average, and you can see it broke below that as we showed in the previous chart, and right now it's sitting on that 50-day moving average. Trouble is, the indicator here is gradually pointing down, or I should say gradually grinding down, and down here, as we showed in the last slide, the intermediate term indicator is down. Now, the good thing here is that these red vertical lines represent the market volume on the down days when the market closes down. And we didn't see even though Friday was a nasty day and Thursday was a nasty day, here's Thursday right in here, and here's Friday right in here, this red volume did not pick up, such as back in here. So this is our hopeful area right here, that maybe this market, rather than breaking through this 50-day moving average up here, it just might hold. So that's what we're hoping for. We keep watching this volume. When we look at the QQQs, we see the same thing. The market broke through the 20-day moving average, which is this green line, sitting right on the 50-day moving average. Problem is, the downside volume looked pretty high on both Thursday and Friday, even though Friday it wasn't as heavy as on Wednesday, and I might have said Thursday before, but this is Wednesday right in here, and this is Friday, which was yesterday, not as heavy as on Wednesday. Kind of a good sign. So we're looking at a few positive things in here right now, folks. But we are holding the 50-day moving average. And when we look at this indicator up here, it seems to be sitting at the 0 line and not trending down. So we have some good signs coming from the tech and the semiconductors. Even though they got hit pretty hard on Friday, it looks like they're still holding their own and is the best sector right now, as of right now. So this coming week is going to be a good week, folks. And then when we look at the Dow, well, the Dow's telling a very, very different story. This indicator up here is still pointing down. This is a shorter term indicator. The market, as represented by the Dow, has fallen through the 20-day moving average, fallen through the 50-day moving average, and continuing relentlessly down. And we're getting this crossover here. This is a nasty crossover when the 20-day crosses over the 50-day. Kind of a silver bearish cross, so we don't like that. And the downside volume is picking up. The only good thing I have to say right here is that at least this indicator is now at this 0 line and it's starting to get oversold. So that's the hopeful part in this whole market, is that, yeah, we've been declining and the market is weakened here, but we're getting down near, possibly if we come all the way back over here, we can see we're getting down near this point. And when we got down to this point last time, which was last year in November, and folks, we had a rally that you just couldn't ignore. You couldn't beat either. I mean, it was great. So that's what we're looking for right in here. All right, now what's coming up this week? Well, we had on Friday, we had Wells Fargo, we had Citibank, we had JP Morgan, State Street, all reporting earnings, and these banks fell. JP Morgan took a pretty big hit, even though it did pretty well. So, in fact, in the morning, we were looking at JP Morgan actually beating a few of the statistics that were out there, but yet by the end of the day, it fell. And this coming week, Monday, Tuesday, Wednesday, Thursday, and Friday, we have all banks. And folks, you know what they say, as the banks go, so does the rest of the economy. However, banks make most of their money when interest rates are higher rather than lower. So with this interest rate environment where some of the Fed officials, Fed presidents of the 12 Fed regions around the country are saying maybe we'll lower rates later this year rather than in the June meeting, should not be bad for the banks. In other words, the banks will be making more money at these interest rates than if the Fed lowers interest rates. So we should get some good numbers out of these banks this coming week, and that might stop the decline as earnings season starts picking up. And of course, it always starts off with the banks, and boy, there's plenty of them. So we're going to have some week this week while the market tries to digest higher earnings, lower earnings, and also the interest rates and what the Fed officials are saying. You know, maybe some of these Fed officials, since they say different things, really should just keep quiet and not talk so much. Anyway, these day-to-day fluctuations that we're getting, the economy is in good shape overall, folks. It's just that inflation is being a little bit stubborn here. So we don't see anything bad coming out of the economy. All right, when we look at portfolio protection, for those of you who want puts that protect the market if it falls more than 12, 13, 14, 15%, in other words, drastic decline, protection, we still have these puts in place, and they're actually gaining in value as the market drops. So that's a good thing, and we'll probably be rolling over this April 19th put sometime this week. If we get a rally on any one day, we'll roll this over into the July put, or maybe buy another June put. Anyway, we want to get past this short-term or what we're hoping is a short-term correction in the market. So those of you who have these puts bought them at very, very inexpensive prices, and so you're sitting pretty right there. So folks, it's been a week where the market has rallied and the market has fallen, market has rallied, the market has fallen, and boy, oh boy, just drove us crazy. And as you can see, we have a little rough water out there in the market, and that's what this picture represents. But folks, the week is over. We got through it. So you go out, you enjoy the weekend, forget about the market, and folks, it'll be back here on Monday, and so will we. All right, have a good weekend, folks. See you next time.